Good morning and welcome to our SoCal home buying webinar today. We're so excited that you're here to join us this morning, and we've got a lot of great information ready to present to you. So thanks for logging in. We'll probably take it slow in the beginning and let a few people still figure out those steps of getting logged in here. We do just want to point out that there is a Q&A function on the side, and we're going to have a few people addressing that this morning if you have a question, but there's going to be lots of resources and a lot of things that we present today that's going to answer most of those questions for you. Okay, so I think we're ready to get going here. My name is Leslie Olivo. I've been with Taylor Morrison for 3 years, in the home building industry for a total of 22. I've got an MBA in business marketing and earned my bachelor's degree in marketing and public relations. I love working in Southern California because of our diverse geography and different customer profiles that we're able to work with. We've got a huge variety here in Southern California. I think that we have a few slides later that kind of covers some of that, but it's one of my favorite things about being here. Even though I've worked in lots of different markets throughout the United States, Southern California, you can't beat the location, and it's just a fun place to work. Here's our agenda for today. So a lot of things on tap this morning. First, we're going to just talk about who Taylor Morrison is, give you a little bit of background in our company and our history, go through a little bit about what's happening in the markets right now, a little bit of a changing environment. So we want to give you some data on things that are happening right now, some benefits of owning a new home, and then also just what's trending in design. And that's one of the greatest things about new homes is we get to stay on top of the latest and greatest in our design. Finding the best deal, sort of teaching you how to shop and what to look for in that process. And then we've got some great speakers to talk to you about the money side of it and navigating a path forward and how to work through some of the obstacles that we sometimes see in the journey towards homeownership. We're going to talk about some of our homes that are available for quick move-ins, review some next steps, and go through what we have right now that is a special promotion for our division. We'll also take some time along the way to address your questions. And if we will also take that time at the end as well if we don't get to it in the chat in the meantime. Okay, well, first and foremost, who is Taylor Morrison? Well, we are so proud to be recognized as America's most trusted builder for 7 years. And that is something that is on the forefront of things we brag about around here. America's most trusted home builder for 1 year, 2 years, 3 years. Okay, but 7, I mean, it's really incredible. And we are just so thankful for that opportunity. Helping people move into their new homes is our business, but helping people make moves in their lives is our purpose. We have the incredible honor of facilitating the American dream every day, and we take that very seriously. And we are one of the largest home builders in the nation, helping people coast to coast for more than a century. So we've got a rich history in the United States and abroad on home building. We are a national builder across 20 markets in the United States. We select locations and amenities that fit our buyers' lifestyles. So we only pick the greatest locations that is going to have homes that best serve our customers' needs that we know that you're looking for out there. We serve every demographic. We are not just focused on luxury. We are not just focused on first-time buyer. We serve them all. And we're really excited about that because we're a builder you can grow with. And we've been recognized as one of the world's most admired companies by Fortune. And we always want to brag about our Bloomberg Gender Equality Index. It's very important to us at Taylor Morrison that we celebrate our home buyers, but also our employees from every background imaginable. And we feel like that gives us our strength because we can come from all those different perspectives to make the right decisions for our customer every day. So that is something that we're really proud of. So this tells you a little bit about who we are. And then we're going to dive a little bit deeper into who we are in SoCal. And I want to talk to you a little bit about what's happening right now in the Southern California area. The first thing is where we are now, because it's not where we were a year ago. Things are in the normal category. Imagine that, normal. And so we still see a few pockets in San Diego where there is such limited supply that it's very strong. But for our primary markets, I mean by that, where we have the most current communities that are for sale in Orange County and Riverside counties, San Bernardino is in there as well. We are in the normal area. And there is a few communities in the Los Angeles County area that are slowing down a little bit from where they were a year ago, right? Which we can all agree was very fast-paced. So this is where we're at as it relates to our economy in Southern California. Our job growth really strong. We're talking about a projection this year of close to 5% year over year. So 4 to 5% there. And we're showing in the Inland Empire a very strong employment number. No surprise there compared to before the pandemic, as people are now offered opportunities to work from home and don't have to make that long commute every day. We're seeing a lot of growth in the Inland Empire. And then permits, these are builder numbers. So that's builder language for a permit that we need to build a home. So we see an increase of 4.8% year over year projections wise. And really what we're seeing is a little bit of a change there where we're seeing more MF stands for multifamily permits over SF, which is single family permits. And that makes sense because we have less land, right? So we're on that land, we're making more townhomes, we're making more condos than we are single family as an industry over Southern California. So you're seeing that dynamic change a little bit where in the past, maybe single family permits were up and multifamily permits sort of stayed the same. Now you're seeing a little bit of shift in that dynamic. It's just because we're running out of land. Well, really not. There's still a lot of land, but it's also because that land is getting more and more precious to us. So we're building more condos. And so that's why you see that dynamic shift and you can see that breakdown year over year. Okay, there is still a huge shortage of homes and opportunities for people to buy homes out there. And so what this talks about is on the resale side. So used homes, and we're talking about how many months of supply are listed on there. And you can kind of see the peak back in 2007, 2008, where there was an excess of supply on the market. And then as you get towards where we're at over the last couple of years, it has gone below about 1 to 2 months supply across. These are the different markets that we are building in right now. So you can still see that our current estimated months of supply is about 1.4 to 1.8, depending on that area. And compared to a year ago, that was at 1.4. I could tell you anything under 3 is incredibly healthy as a real estate environment. And so that's what we're seeing here. It's still a lack of opportunities, but maybe a little bit more than there was a year ago. A few more choices out there for you. Where we are now. This is kind of the footprint of Southern California that we currently serve. So when we look at this, we're looking at the number of projections of how many projects we have. And of those, the Southern California market, we're about 13%, just Taylor Morrison in there. So then what we see here is a few statistics on our current new home prices are normal. The existing home values, we're still expecting those to go up. They have gone up 20% year over year in the last year. Employment, thumbs up. That's again going up to almost 5% there year over year. And the new home supply staying pretty constant. So that's all very good in terms of indicators of what's happening in the market. When we look at our listings that we were just talking about, number of months of supply, this is just a way to look at it differently. And the how many individual listings there are currently versus a year ago. So again, that's another, you're showing a little bit more than listings than you saw a year ago. Gives you more options as a consumer, and that's exciting. Median household income. You see that for Southern California is high comparative nationally. And if you live here now, you know that it's expensive to live in Southern California. And so you tend to see median household incomes that are higher than the rest of the country. And you can see how that growth is projected for right now, what it was a year ago, and then going forward into the next few years, we are still anticipating that to grow. Now here's that same data just specifically for the Inland Empire. And you can see here as well, income going up, normalized pricing, existing home values increased 18% last year. Employment increased 5.4. This is that little bit of higher employment growth we see in the Inland Empire, which we really define as Riverside and San Bernardino counties. As it relates to the total number of communities out in this area, including our competitors, we're at 211 total new home communities in this area. So there's lots of choices for a consumer. And that's really where we want to reach out and make sure that you understand why Taylor Morrison, why you would want to buy a Taylor Morrison home, and why we're different. Speaking of benefits of owning a new home, there's kind of two different buckets here of benefits. And I'm going to go through the financial ones first, because that's the logical side of our brain. And that's the part that we need to take care of as it relates to what the science is, right? What the logic is on buying a new home. Buying a new home is a long-term investment. It's not a day trading stock industry. You're going to be there for a while. So we want that to be a long-term investment. Real estate appreciates slightly higher than inflation and creates a forced savings for your family. As you make those payments, you're going towards your equity, and that's going to be like a piggy bank for your future. And the stability of a fixed payment without concern of rising rents. The headlines on rising rents in Southern California over the last year have been alarming. All those rents are going up, and you never know what that next rent increase is going to be. And so one of the greatest parts about a fixed mortgage is that you have the ability to know that this is going to be your payment for a significant period of time. Mortgage interest is typically tax deductible for both state and federal taxes. I am not a tax professional, and I highly encourage you to talk to yours as it relates to very specific questions. But I'll tell you, your interest on your mortgage is a tax deductible item, typically for both your state and federal taxes. Now let's get to the good stuff. Let's talk about that emotional investment. It improves your sense of stability and safety for your family. It provides privacy, freedom. You can paint that wall any color you want. You can hang any light fixture you want to in the hallway. And it gives you that sense of pride and community. Those flowers that you plant in the front yard and come home to every day and get to see grow, that tree in the backyard that grows and gives you shade and you put the swing set under, those are huge elements of pride and community that you absolutely deserve in buying a new home. Personalizing your space, you can live your best life. That's what we were just talking about. You can make it your own. You can have it aligned to what your taste is, not what your landlord's taste is. And the peace of mind with a new home warranty. Not everyone knows this, but new homes in California come with a warranty. So it gives you that peace of mind when you're transitioning from renting to understand that you're able to stand behind the product, that we're not bailing on you. We're not going anywhere. So you can always call us with those types of concerns. Okay, let's see what's next. Oh, talking about personalization, this is one of my favorite parts. Something that's very special that Taylor Morrison has is their Canvas program. Canvas is our design collections, if you will. And what happens is we have these really great high-level designers that worked with all of our suppliers to identify trends locally, nationally, what's happening on HGTV, what's happening in all the different markets in commercial spaces as well as residential spaces. And what they did is curated these very unique packages that help to coordinate those trends with things that work together. And so at most of our communities in Southern California, with a few exceptions, we offer these canvas collections. And so if you buy a home before your home starts, it gives you the chance to select one of these. If you buy your home after your home starts and construction has already started, one of our designers has selected one of these packages for you already. What that gives you the sense of assurance that they picked good stuff. It's not a hodgepodge of maybe what the salesperson likes or what another person liked. These are nationally tried and tested color palettes that make sense. The products work together, and they're relatively neutral. So these really great collections, and by having these collections, we're able to get really great pricing on them. So you'll see that it's very affordable to upgrade and personalize, and you get this sort of professional touch. So you don't feel like you're out just picking that stuff on your own. Okay, so then we've got a whole team of experts. We have got everyone on a team ready to build your home. And so I'm going to walk you through kind of the journey as it relates to who's on your cheer squad. So this is your hype squad. It starts with your internet home consultants. And these are, oh man, these are my MVPs. When you start your journey, you're going to reach out to an internet home consultant and say, where do I begin? I want to live in Riverside County. I want to spend about this much money. And I want 4 bedrooms. Where do I start? And they're going to be able to really break that down for you and say, I think that you should visit these 3 communities. I think that this is the perfect community for you. They can make a personalized appointment for you to come in and meet with one of our sales experts that's an expert on that community, but they get you started on the internet home consultant side. So they're your advocate, and they make an appointment for you so that you can have that handoff to the community sales manager. The community sales manager is the expert in the neighborhood. They know what's available. They know the surrounding area better than anyone else. They're going to be able to provide you very specific information about the features and about the homes that are currently available. And then the designers. If you choose a community that has a design studio, then you may go on that path depending on which home you select. On the other hand, the Canvas process that we just went through those slides, that is the alternate path on a lot of our neighborhoods that are currently under construction. So now let's talk about building your home. We've got the best construction superintendents in the entire industry. I'm convinced of this because of 2 major things. Number one, the process and inspections they're held to throughout the building process are second to none. They are in every room of every home every single day, inspecting it, making sure that that our trade partners have completed the work accurately and according to the specifications. The other part of it is they love to talk to you. And I love that about them. They want to walk you through that home. They want to show you how it works. It's like showing off your new car to them. This is so exciting to them that they have been a part of building your dream, that they want to show you how it works and the components to it. Okay, let's talk about the loan side. We need that loan side to get through too. So we've got a team of loan consultants that are here in Southern California that are going to be a good partner for you on that. And they know everything about the loan limits by county. They know everything about how to leverage different programs to get what's right for you and your family. And then Aero Consultants, I'm just going to touch on because we're going to go on a deep dive for that in a little bit. And I really want to save the benefits of that for our friends that are going to talk about that in a moment. Christy, it's over to you.
Thank you, Leslie. Good afternoon or good morning. Good afternoon comes lightly to me because you guys will see that I'm on the East Coast. But just a quick introduction about myself. I've been with Taylor Morrison for over 20 years and have called Taylor Morrison and Taylor Morrison Home Funding my home for the majority of my career. And it's going to sound a little crazy, but mortgage financing is actually a passion of mine. And it really does center around being part of that home buying journey with all of our customers. But one thing that's really unique about Taylor Morrison Home Funding is we exist to ensure that our sales teams and our mortgage teams work together to truly help families achieve that dream of home ownership, and really have the most seamless experience possible. Like I mentioned, I am in Florida, so I oversee our Florida region of our origination team, but I do assist nationally with our sales training and marketing initiatives, and some of that we'll share with you today. But I'm going to go ahead and kick off the financing portion of today's webinar, and I'll be joined by a couple of my friends in a few moments. So hopefully most of you would agree that the thought of buying a new home is super exciting, but we got to be honest that the financing side of purchasing a home, I really wouldn't call the fun part. We try to make it fun, but it is, diving into your finances personally, and we're excited for you to be buying the home, but let's, I would say probably over 80% of our home buyers nationally do need financing to complete their home. So, whether you're looking to buy your first home, maybe you've been there, done that, buying new construction is definitely a unique experience compared to purchasing a resale home. And then having construction and financing all under one umbrella is truly the best path to that positive customer experience when you're building a new home. Leslie just touched on all of the different team members, and trust me, there are even more than that behind the scenes that are really trying to get you to the finish line. And we want to make sure that we have that one-stop shop that relieves you from the burden of that communication between your builder, your lender, your settlement agent, if you're working with a real estate agent, your realtor. So in addition to mortgage services, Taylor Morrison does have an affiliate homeowners insurance company that helps make that piece seamless, and also works with a preferred title company. And so really just keeping all of those departments under one umbrella, working hand in hand, really gets you to the finish line and make sure that your financing is ready when your home is. So again, appreciating that a home purchase is, as Leslie said, it's both an emotional and a financial decision, and it's likely going to be the largest purchase that your family will ever make. So over the next segment of this webinar, myself and my mortgage partners will touch on some very high level loan qualification components. We're going to share some information about our ARO department, which Leslie teased about. That's Able, Ready, and Own. And then last but not least, we will introduce you to Dorothy. That is our mortgage technology platform. So as we walk you through the presentation, I just want to remind everybody that we do have the Q&A. Feel free to pop some questions in there, and we will answer as best as we can any questions you have regarding financing. So first of all, just appreciating that, as I mentioned, some of you may currently own a home or maybe previously owned a home, but we do have some guests that may be first timers. So we always think it's best to provide some of the basics to loan qualification. For those of you that have already experienced home ownership, maybe it's been a while, so a refresher never hurts. Things do change frequently in the mortgage industry, and so this is just a brush up for some of you. Many industry professionals will refer to the foundation of loan approval as the 4 C's of mortgage qualification. I honestly prefer to compare it to the 4 legs of a chair. It just gives me a good visual, knowing that most of us likely wouldn't sit in a chair with wobbly legs, and mortgage qualification is no different. So as a lender, we always want to be sure that your qualification has those 4 strong legs, giving that stability that we need to move forward and make sure that you can remain in your home for years to come. And appreciating that when you're lending hundreds of thousands of dollars, we want to make sure on these 4 different components that number 1, the value of your property that we're loaning against is going to be that collateral, and we want to make sure that that has the strength. We also understand your ability to save funds to purchase the home, and your ability to repay the loan, and whether or not you have that strength in your credit history to pay your debts timely. So we'll touch on each of these individually and provide a general understanding, but hopefully it assists you in discovering where you are in that journey to home ownership, especially for those of you who have loan qualification top of mind today. So let's just talk about the appraised value, which is our collateral. And the property appraisal reports that we use are required on every single loan transaction, unless, of course, you're paying cash to purchase. So we complete the unbiased third-party licensed appraisal, so there is no influence ever given by the lender or by you, the home buyer. And we must be sure we're lending appropriately to the value of the home. And you, as the homeowner, want to be sure that you understand the value of the home you're purchasing compared to the price you agreed to pay when you went under contract. And just keeping in mind that the closed comparable sales from the like-sized properties are what is used to establish the value. So not necessarily homes that are under contract and waiting to finish that final close of escrow. And on that rare occasion, it does happen that we have an appraised value that will come in below a purchase price, but typically we resolve those through financing. So a lot of times, if there is a difference in appraised value, we can change loan to value and have absolutely zero impact to a consumer's financing. But if there is an impact to financing, we've done resolution, whether that includes additional incentives to cover any upfront mortgage insurance if you were planning to put 20% down. Also assistance on cash to close, should more down payment be needed to meet those loan program guidelines. But what we really do try to avoid is reducing price to mirror our past closings, because it truly is not always the best option. It does potential for that domino effect of causing a home depreciation in the community. And I think it's just important to note, Leslie went over a lot of the statistics of where we are right now in the market. And I just wanted to touch and recognize that national home prices have seen appreciation over the last 2 years nationally of 9 and 15% respectively. And although those rising interest rates that we're all hearing about have slowed both the new and existing home sales, we still are seeing a very low supply that's available. And we also anticipate that our home appreciation is probably going to level out to those historical national averages of about 5% per year. And I don't know if you all noticed, Leslie, I took note on your slide with the supply to just see how much supply was out there back in right before the crash of 2006 to 2008. And we just do not expect to see that type of significant correction in the market. And really, that's primarily due to prudent lending. And for those of you who were around and maybe in the home buying market back then, or remember your parents that were, there were not so prudent lending guidelines out there that caused a lot of the troubles that we faced. But understanding that it is truly corrected itself to make sure that our lending is provided to those who can truly afford to purchase their homes and hold that strong equity. So with that, let's just move on to our second leg of the chair, which is our down payment. And I will let everyone know there is a lot of information in these upcoming slides. So just for essence of time, we will be sending out this recording as well as the entire presentation. So you can take that time afterwards to just absorb maybe what you didn't catch today. So we'll stick to high level. But going on to this cash and down payment, we do always have to verify source of funds needed for down payment, and plus any settlement costs and closing costs that are needed to complete the purchase. So we're looking at maximum loan amount, which is determined by the sale price or the appraised value, whichever is less. And that minimum down payment is going to vary by loan product, occupancy type, whether you're buying a primary residence, maybe you're looking at a second or vacation home, or perhaps you're looking at an investment property to rent out. But the guidelines are established for where your down payment funds can originate. And we've included on this slide both the acceptable and unacceptable sources for down payment. So you do want to make sure that any transfers of funds, if you're kind of getting ready for that purchase and you're shuffling funds around, you have to make sure that those transfers that come in and out of your bank accounts or any deposits that you make that may not be related to your payroll can truly be sourced through a paper trail, whether that's through your bank accounts, perhaps a family member is providing gift funds to you. Maybe you're selling real estate that you already own. But one thing I always remind people is take note that if you've been saving cash under your mattress, that is probably going to weaken your chair's stability. So that is definitely not one recommended source of down payment. But going along with down payment comes your earnest money deposit. So when you do go to contract, there is going to be earnest money that is going to be required. Taylor Morrison does have a required deposit that could vary by amount and by community and by market. And I would always suggest to reach out to those internet home consultants Leslie mentioned and get you started to really understand what the earnest money deposit requirement is. But it will be applied towards your down payment when your home closes. So if you're obtaining financing versus paying cash for your home, we do need to make sure that you have the ability to provide proof of those deposit funds. Even if you buy today and you don't close for 9 months, we still have to source that piece of the down payment. And if you have unique circumstances, as Leslie mentioned, we've got a local team of loan consultants that can answer those individual questions for you if they feel unique. And then lastly, on this down payment and cash required to close is interested party contributions. So, typically our settlement costs that are associated with buying a home, again, depending on the market, and I did peek at California, can range anywhere from 1.5% to 4% of your purchase price. And that's going to include everything such as lender fees, settlement fees, government fees, transfer taxes. There's homeowners insurance and real estate tax escrow setups. And there is the allowability to waive the need for a real estate tax and homeowners insurance escrow account and pay those on your own, which does reduce funds for closing. The majority of Taylor Morrison communities will have a homeowners association, so there could be fees and startup costs that relate to the community. But I just want to point out that you have interested parties in your purchase, and those would be your seller, which hopefully is Taylor Morrison, your lender, possibly us, and then a real estate agent you may be working with. And although we're unable to contribute towards your down payment, we can absolutely assist with some of the costs that are associated with financing. So for example, you may have a real estate agent who wants to contribute a portion of their commissions, or as your lender, provide you a credit at closing. All of our Taylor Morrison communities do provide a contribution towards your financing costs as an incentive when you use Taylor Morrison Home Funding. And then we double down with a lender credit from us as the lender at closing. And there are maximum limitations that are typically based on a percentage of your purchase price that can be given, but most programs do allow enough in contributions that will cover almost all of these costs if those incentives are available. So in just a little bit, Leslie's going to circle back up on that and share the financing incentives that Taylor Morrison's offering that can be used in multiple ways to help you save, and not just at closing, but also with monthly payment. But I'll finish up my portion just by getting us through our third sturdy leg of our chair and talk about capacity. And capacity simply refers to that ability to repay the mortgage. And that is through your job stability and then likelihood of your income continuing. And I do always like to mention that mortgage approval is based on your gross income versus your net income or your take-home pay. And our area manager, Pete, he's going to hit on those monthly income and debt guidelines a little bit and how you can understand your maximum spend against the income that we're using for qualification. But when we talk about job stability, we're looking typically, rule of thumb, 2-year job history in the same line of work, doesn't have to be the same employer. And there are exceptions to that. So there's many times and many unique circumstances that, let's just say, for example, if there's been a gap of employment due to a hardship, or there was time taken off for family reasons and someone in your family's re-entering the workforce, that could be considered for qualification. We have many entrepreneurial self-employed borrowers, and sometimes that income calculation can be tricky. We do look at 2 years of tax return income, last 24 months on an average, and do a standard income analysis, which isn't quite black and white as a W-2 wage earner with your typical pay stub, and it could require that deeper dive to really understand that qualifying income. And if you are in that situation and you feel it's unique and you're just not sure where to start, again, I always encourage anyone to reach out to our team of licensed loan consultants, because we would be happy to answer any questions, review documentation, and help you get that one piece started. So I just feel it's so important that we uncover any obstacles before you make that purchase. And Pete's going to provide you more information on how to contact our team. But before I do hand it over to Pete, I'm going to ask Deandra, who is our subject matter expert, to wrap us up with loan qualification basics and tell you a little bit about credit and our valuable Aero department. So Deandra, over to you.
Thank you, Christy. I've been in the mortgage industry for 22 years, and I actually started in Riverside, California. I was fortunate enough to find my home with Taylor Morrison 14 years ago. And to say I was excited when presented to this opportunity to be a part of Aero when it was first envisioned 11 years ago is an understatement. I know Christy earlier mentioned how finance is her passion. For me, it's being able to educate buyers on the ins and outs of credit and help guide you to your new front door to achieve your dreams of home ownership. Credit is like a thumbprint in its uniqueness, meaning no two customers' credit profiles are the same and each one tells a different story. When looking at credit scores for a mortgage, we will pull a tri-merge credit report, which simply means a report from all three bureaus. That'd be Equifax, TransUnion, and Experian. Residential mortgage credit reports will many times score differently than the consumer credit report that you'll see. For qualifying credit score for loan approval, interest rate, and mortgage insurance premiums, they're all going to be based on the median or middle credit score. If there's one or more borrowers on a mortgage, it will be the lower of the median scores used for qualifying. This visual provides a look at what factors make up your overall credit score. As you can see, 65% of your credit score is based on timely payments and overall credit utilization, which simply means how much you owe against how much available credit you have. Next would be the age of your credit history, followed by new credit and the mix of credit types like student and car loans, revolving debt, and even mortgages. There's quite a bit of information on this slide regarding credit basics, and I'd like to mainly touch on the difference between a soft inquiry and a hard inquiry. There are a lot of myths about credit inquiries, but a soft credit pull does not impact your scores. They would include things like a pre-approval for a credit card, checking your own score with like Credit Karma or even Experian, like they have an app that you're able to use, and employment verification. A hard inquiry would happen when you directly apply for a credit card, any type of loan like the student loan, car loan, or mortgage, even a personal loan. These inquiries will remain on your credit for 2 years and could cause small incremental decreases in your overall score. On average, it's less than 5 points. Only 14% of consumers lose more than 10 points because of an inquiry, and 89% of that time, inquiries are not even one of the top 4 factors that are currently impacting your score. When shopping for big loans such as mortgages and auto loans, you typically won't get like an incremental ding on your credit if you're shopping within a 14 to 45 day time frame of that initial inquiry. You may have already gone through a pre-approval with another lender, and you might be concerned about another inquiry on your credit. However, when you pre-apply for a loan with Taylor Morrison Home Funding, we're only going to do a soft credit pull, which provides us 2 of the 3 scores. Then once you make a decision to purchase a home and move forward with the formal loan application, we would then generate a tri-merge pull with the hard inquiry taking place. Again, we're going to be sending out this presentation so that you'll be able to review all of the credit basics, but I'll quickly mention that employment, income, and bank balances have no impact on your score. But as Christy talked about earlier, they're both main factors in your loan approval and typically indicate a strong payment history. Taylor Morrison Home Funding has a department designated solely for qualification improvement and loan enhancement, which would be ARROW, or Able, Ready, and Own. We offer a personalized strategy to help enhance credit and provide guidance and education to assist customers on a path to home ownership. ARROW isn't only for those seeking credit score improvement to gain loan qualification, but it's also to help those with great credit that are seeking score enhancement for benefits with rate improvement or to decrease the mortgage insurance premium that you might have to pay. ARROW is a complimentary service for both prospective homeowners as well as those already under contract to close on a home. You are not under any obligation to purchase a home, and we tailor a path specific to your credit needs. After pre-applying with Taylor Morrison Home Funding, your loan consultant can enroll you in our ARROW program, where we will run credit simulations based off of your tri-merge credit report and provide you with a personalized improvement path based on your needs. We aren't classic credit repair in ARROW, which just means we won't be speaking directly to any of your creditors. It does require your participation in order to complete our ARROW program, as that's something that you're going to have to do when negotiating debt repayment and balances. Some examples of ARROW recommendations would be suggestions to open a new account, be added or removed as an authorized user, pay off accounts, or reduce balances on existing accounts. If you've applied with Taylor Morrison Home Funding, our ARROW consultants are familiar with your financial profile, and we work hand in hand with your loan consultant and Taylor Morrison Homes to ensure we aren't making recommendations that would hinder your ability to purchase, such as utilizing your down payment funds to pay off debt. We engage with you and help keep you on task with open communication, whether that be by phone or email, whichever you prefer. In just the last year, we've assisted hundreds of families with an average enrollment time of less than 90 days. Over the last 10 years, ARROW has helped over 4,800 families achieve the dream of home ownership through qualification improvement, while also gaining financially through score enhancement. If at any time you think we could be of assistance, you can start by reaching out to your local loan consultant team. With that, I'm going to go ahead and turn the mic over to Pete to share more information about our team in Southern California and how to get started with Taylor Morrison Home Funding.
Thank you, Deandra. Good morning, everybody. Thanks for joining us today. My name's Pete Guvis, and I've been in the mortgage industry for a little over 28 years, and 20 of those being with builder mortgage companies specifically. I've had the good fortune of being part of Taylor Morrison Funding since 2020. I am the area manager, and that's provided me the privilege of overseeing two unique markets, both in Southern California and the Bay Area. And I get to work with the amazing team that you're hearing today. In Southern California, we have 5 outstanding loan consultants, and they're going to be able to answer any questions that you have based on the things that you've just heard and some of the things that we're going to talk about right now. I did want to take a minute just to expand on our ARROW program, Able, Ready, Own, that Deandra just spoke about. I wanted to give you a real life example. We just had a buyer and they were looking to lock in their rate. So we talked to one of our loan consultants and started to see where the rates were. At that time, the buyer had good credit, 702, and 10% down, which is a very typical loan that we see in Southern California. The pricing that day, and pricing has moved around quite a bit, but at the time, that buyer would have been looking just under 6% at a 5.875 rate. With the help of ARROW, we got that buyer's credit score up 40 points to a 742. The 742 allowed us to get a 5.5 rate instead of the 5.875. So that rate difference was $128 a month savings to the buyer. So over $1,500 a year, right? If you kept that loan for 10 years or in that house, that's $15,000 you would have saved. Or if you were in there for a full 30 years, over $46,000. So really impressive. The ARROW program is just fantastic. It's a huge benefit that you get if you'd like to work with when you're financing with Taylor Morrison. So let's talk a bit about what mortgage suits your needs. I know there's a lot of information on here. Remember, we will be sending this out. Christy and Deandra discussed some of the basic qualifications. So what I wanted to do was just briefly touch on some of the more common loan products and some of the features. So let's start with the conventional loan. Conventional, the reason it's called conventional is because it's really the most typical loan out there in the market. It's a non-government loan, and it is the #1 product that we work with in the Southern California market. The typical expected down payment is 20%. However, you can put as little as 5% down. And we see conventional loans across the board, 5%, 10%, 15, 20, or even more. There is a conventional loan also available for first-time home buyers where you can get in with as little as 3% down. And one of the most important things on the conventional loan is the loan limit, which in Southern California is $647,200. So that's not your purchase price. That would be after you put a down payment. As long as your loan falls under $647,200, you can take advantage of that conventional loan. Because Southern California is a relatively higher priced area, we also get a carve out, which is called a high balance loan. This is still considered a conventional loan, and it's used in markets such as ours where we have expensive housing. And that's so you can get a loan through very similar guidelines above $647,200, but never more than $970,000. So some of our really high cost markets, LA, Orange County, you can do a conventional all the way up to $970,800. They're typically a little less restrictive than the jumbo loans, that being over $970,000, but they also carry a slightly higher rate than a conventional loan. And you need at least 5% down if you fall into that area between the $647,200 and the $970,800. There's also government-backed loans out there, and these are very common, the VA and the FHA loan. So VA is excellent product for active duty military, and it is for military only or their spouses. You can do VA with little to no down payment. It's very flexible on the debt ratio. Again, how much debt you can have compared to your income, and it allows for lower minimum credit scores than a conventional loan. So a lot of great features there. Moving on to FHA. FHA is secured by the Federal Housing Administration. So again, a government-backed loan, and that only requires 3.5% down. So again, if you have a little less to put down, FHA is a great way to go. There is a common myth that it is for first-time home buyers. That is not the case. So again, as little as 3.5% down, you can do whether you're a first-time home buyer or not. There are loan amount restrictions based on the county. So in Southern California, $562,350 is the maximum for an FHA loan. And if you're in San Diego, that number goes all the way up to $879,750. FHA is very flexible when it comes to your debt ratio requirements and your credit scores, kind of like a VA loan. So there's oftentimes, a buyer may come in and we look to do a conventional loan, but oftentimes going to an FHA loan may be the way to go. And anybody can take advantage of that as opposed to a VA loan where, again, you would have to have the military background. Last piece of the loan types is the jumbo loan, or what we call non-conforming. This makes up probably about 5% of our total loans that we close in Southern California. Because even a lot of times people are buying expensive homes, they're trading up and putting a large down payment from the sale of their last home. If you do a jumbo loan, that's going to be above that amount that Fannie Mae and Freddie Mac will purchase. So again, in some areas, that could be a loan amount above $647,200. And in LA and Orange County, that would be a loan above $970,800. So jumbo loans are, typically when a lender is going to lend that much money, it's going to be a little tougher on the qualifying. But again, plenty of jumbo loans and plenty of people that are do have the ability to qualify for that loan. So those are the most common types of loans that we're offering. And what we can do from there is take a little look at how your payment is derived and your total housing payment, and basically the affordability that comes along with that. So what makes up your total housing payment, right? Most people know you've got to repay the loan. So that's the principal and interest portion. That's going to be the amount you borrow times your interest rate. That's going to give you the principal and interest you have to pay back. However, when you own a home, you also have to pay property taxes. You're going to have homeowners insurance. You're going to have mortgage insurance, depending on the loan product or depending on the down payment you have, as well as most communities are going to have homeowners association dues, what we call HOA dues. And those are typically paid separately from the mortgage, yet they're still a part of your monthly payment. So those are considered when we are looking at how much you can afford. So we've mentioned debt to ratio a couple of times, and that's really a critical piece of your loan approval. That's the affordability piece. The debt ratio compares how much you pay monthly. So if it's your total housing payment, those 5 pieces of your housing payment compared to your gross income, again, not your take home, but your gross. So we can do that. It's the housing portion, and then you'd also want to look at your other monthly obligations. So in other words, if most people have a car loan, a school loan, or possibly some credit card balances, those minimum payments on all of those loans, along with your new housing payment, we're going to take all of those and we're going to look at that against your gross income. And again, the different loans that we just went over are going to have different tolerances for how much debt you can have compared to your income. And that's going to be how we really look at that affordability piece. Most loans, they do not want, or a rule of thumb is really that your home payment along with these other payments should not be more than 40% of your gross income. So, taking round numbers, if you made $10,000 a month, that's up to $4,000 a month in mortgage payment and other debt. But there are some loans that will let you go up to 50%, and FHA and VA with good credit, sometimes even higher than 50% of your income can be going out to debt, and you can still qualify. So again, that's where your loan consultant is going to come into play, helping you choose the right program and the one that's going to fit your needs based on your income and the amount of debt you're going to have. To calculate your own debt to income ratio, you would consider that new housing payment and only your monthly credit expenses. So of course, the housing payment, like we said, are the 5 pieces that we talked about, along with includes the taxes, homeowners insurance, mortgage insurance, and HOA. And then you would add your minimum payment. So if you have a credit card balance, regardless of what that is, if your minimum payment's $25, that's what we're looking at as your monthly debt on that credit card. If you have a car loan that's $300 a month, we're looking at that. If you have a school loan and that's $100 a month, we're looking at that. But the big thing is when you look at the credit cards, if you look at what you pay, it's not what you're paying to them monthly, it's the minimum that you're asking for. So if you add all that up, the new house payment and any other current debts that you have, divide that into your gross income. Again, that's your gross, which is going to be more than your take home. That is how we get the debt ratio. So again, that is very, very important when it comes to your overall qualification. All right, so let's see, moving on. One thing to keep in mind, things like groceries, utilities, gas, childcare, cell phone bill, those are not included in this equation, right? It's going to be things that are really showing on your credit report. One exception to the childcare is a VA loan. VA is interested in how much you pay for childcare. So hopefully you guys on the call are almost ready to get started. So whether you're looking to pre-apply, or maybe you're considering Arrow, or just want to talk to a mortgage professional, you can get started by going to our taylormorrison.com website /home financing. If you go to the builders page at taylormorrison.com, there's going to be options to choose home financing. If you're looking at seeking Arrow counseling, you can get started with one of our professional loan consultants. They will, along with Arrow, run the credit simulators and look to see how much we might be able to improve your credit score. If you want to pre-apply for financing or get some other details, again, you can click through the website to start your journey. That's going to actually allow you to apply for a loan online, which is awesome. And if you just have questions or you'd really like to talk to somebody first, then you're going to click to that Talk to Us tab. So hopefully we've expanded your mortgage knowledge a little bit today. Appreciate you spending the time with us. And I'm going to give the mic back over to Leslie, and she will bring us home. Leslie, back to you.
Thanks, Pete. So back to how we get started. We had talked about your hype squad and all the cheerleaders that are on the team standing behind you. And the first step in that is our internet home consultants that are ready to select your or get you started with an appointment. So we've got a number of online tools. We're going to kind of hit a few highlights on that and talk about some of those connections that we have for some of the virtual tours and self-tours that we have available as well. So we want to get you started. And the best place to do that is starting from our website. So when we start online from our website and we go to the California communities, we have a number of communities that best suit your geography and your family's need for budget. And you can sort of view them all here and sort through your own needs as it relates to number of bedrooms or the price range that you're looking for. Then once we get into the details of a community in particular that you're interested in, there's lots of things to do on this page. One is on the right-hand side, you have the ability to just sign up for more information. That little lead box right there is going to go over to our internet home consultants who will reach out to you and give you more details that you need, or if you wanted to see something in more detail. This also gives you the details around where the sales office is, and you can hit the driving directions button there to get a more detailed view. I always want to advise people on this driving directions thing. We're building new homes, so a lot of times our streets are not in the systems yet. So if you're using different map programs on your navigation system on your car or something like that, sometimes we're not in there. So it's always good to click on the driving directions and get a little bit more detail. This tells you the sales team that's currently staffed at the neighborhood, as well as our community hours. So that'll give you the opportunity to schedule an appointment directly from here with one of our sales agents, and also to see the hours that we're open. Right now we're on our summer hours and we're 10 to 6 every day. Okay, now we got our online reservation system. This is groundbreaking stuff. This is so cool. And I'd love to see our customers interacting with this stuff because it is done usually around 10 p.m. at night, when we all do our best internet surfing, right? So what this enables you to do is go into our site plan and take a look at exactly what plans are your favorites. And when you decide what plans or what lot, you can kind of navigate through here and see what's currently available. So as an example here for our Olivewood community, you can view the homes that are currently under construction that are not sold. And you can go right into them and reserve the home. And this reservation starts a process that will prompt you to start your pre-application with TMHF and get an appointment with the sales agents to connect on the details. But you can do this 24 hours a day. And like I said, it is so incredible to see the activity that comes through in the middle of the night as people are navigating through their dream home. So we've got a few next steps here. We've talked about the appointments that we're able to do. And one important note that I do want to bring up is about real estate agents. We love our realtor partners, and we could not do what we do if we didn't have them. So we want to make sure that we know if you're using a realtor. You don't have to use a realtor, but if you are using one, we want to make sure that they're treated like a VIP. So as soon as you let us know that you're using a real estate agent, that helps us get you registered. And so that is something that protects that relationship for all the parties involved, and so that we can get them registered. We want to know that as soon as we can. It's really important that you have your agent with you on your first visit. So making sure that they're coming with you to, again, just make sure that we're all registered and we're treating everyone like a VIP. Then you're going to find out your buying power with your TMHF pre-application that will help you understand your budget and what home makes the most sense for your family. Then always you can ask our opinions. We're your trusted advisors. We want to help you on this journey to make sure that you're making a great long-term decision. We do have some homes that are under construction right now, and those homes will are at different cycles. They'll be ready at different times. We've got a handful of homes that are ready today, and we've got some that are going to be ready at the end of the month and the end of December and everything in between. So the benefits of buying a quick move-in home: you're able to enjoy the design curated collections by those design experts that have chosen those canvas packages based on our design trends. It's a shorter wait time. You know, when we build a home from scratch, it can take anywhere from 6 to 9 months, and sometimes that's too long. So if you can get started with your home halfway through that process, then maybe that better aligns with your life or your lease or the baby due date or whatever it might be. You're able to lock in your interest rate sooner. So a lot of us have anxiety until we get that rate locked, and so we want to get that time frame shortened up. Reduced stress because there's less decisions to be made. Some of these decisions have already been made for the home already. So then that helps reduce your stress. Your client receives the same, and this is a broker comment, but you're going to receive the same exact warranty, whether you build the home from scratch or you build the home and you start within 30 and close within 30 days. And our home warranties are significantly better than resale because they're backed by the builder and they're for a longer period of time, depending on the item. There's a lot of terms and conditions around warranties, so I don't want to get in too many specifics. We have lots of that information for you at the sales office. Okay, and this is about our local promotions. Right now, we have a promotion going where you could save up to $100,000 at some of our communities. And I think that this is really an incredible promotion because we're not telling you how to use those funds. And Christy, are you going to share with us some of the ways that people can maximize these dollars?
I would be happy to, Leslie. Thanks so much. You know, to everyone that's joined the call, this is just such an exciting thing for us. And, you know, we talked earlier about, you know, price reduction over non-price reduction. And we'll show you here in just a moment, just kind of what that variance looks like. I think a lot of times we think to ourselves, you know, we put ourselves at a price point. You know, I have to stay under $500,000 or under $600,000 or $300,000. And, you know, at the end of the day, really the number one driver to purchasing a home is payment, your monthly payment. And number two behind that is going to be the cash out of pocket. So what Taylor Morrison has done that's extremely unique is offered finance incentives towards all different kinds of things. So you have the option on how you want to use those funds. And a lot of times it is thought, you know, oh, I could buy down the interest rate for the period of 30 years, or I could use for closing costs to reduce my cash out of pocket. And what's very unique about the offerings is Taylor Morrison is offering anywhere from 4 to 6% of the final home price converted over into dollars to be used towards your financing. So working with our loan consultants, we're able to tailor those dollars to best suit you. Maybe this is your first home and you are thinking, okay, well, I'm going to get in this home. I'm probably going to be here for less than 5 years because our family's going to grow and we're going to expand and we're going to build equity in our home. And in those instances, maybe permanently buying down the rate over a 30-year period isn't the right option, but we could temporarily buy down your interest rate for the first couple of years, and Taylor Morrison can subsidize that payment through those incentives. Many times we are seeking to save up every penny for 20% down because we don't want that dirty word of mortgage insurance that we'd have to refinance or sell many times to get off of our loan or wait a few years for it to drop off on its own. But mortgage insurance can be paid up front, and Taylor Morrison can provide those funds to do that. Leslie talked about interest rate locks. If for some reason you are looking to build a home from the ground up, we offer long-term rate locks from 6, 9, and 12 months. And we can use a combination of all of these to help you. And just real quick on the next slide, and then Leslie, you can close out. And we'll send this out to you. These are just two infographics. The one on the left is really showing that difference of if you purchased a home that was offering that 4% in savings, in this case, just nearly $27,000. If we were to use those dollars towards mortgage insurance, if you were placing 10% down and a portion of your closing costs, as well as buying down your rate, you can see on the left how that compares to if you had paid more for a home and borrowed more money. You actually will achieve the lower payment than you would had you paid more for the home. The infographic on the right is probably one of my favorites. This loan product just doesn't get enough airtime, in my opinion, but this is a temporary buy down. And I touched on that a moment ago, where the seller is essentially subsidizing your payment for the first 2 years. A lot of people think it's an adjustable rate mortgage, and it's not. This example over here on the right is showing, and this is an FHA loan example, showing a permanently bought down rate using funds, achieving that 4.625 interest rate for the last 27 years of the loan. But for the first 2 years, the subsidy is there, saving $383 a month in the first year and $198 in the second, bringing you nearly $7,000 in payment savings. So this is just such a phenomenal program and a great way to utilize funds, whether you're easing into homeownership and coming out of a rental, or you just don't think you're going to be there very long. So, again, speaking with the loan consultants and working with your community sales managers is probably the best way to figure out how can we get you that payment you need and make sure that we get you with the right cash out of pocket.
That's my favorite one too, because I think that as you sort of ease into your payment and your household income is increasing, it gives you a great opportunity to achieve the best of all worlds. Okay, so let's talk for a second about if you're currently in a home and that you need to sell in order to purchase your Taylor Morrison home. We have a very unique partnership with a company called Offerpad. And so I wanted to talk to you about a little bit of the details there. So let's say you've walked into your Taylor Morrison community and you've fallen in love with a home and you're thinking about all of those things that we all keep us up at night, moving, packing, showing your home. What are you going to do with your dog? How are you going to do an open house when the kids never make their beds? All the things we think about, right? And so we have an opportunity and a partnership there to give you the chance to get an offer on your home that doesn't require all that stuff. And so what Offerpad does is they operate in several areas of Southern California, not every single one. So it's important to kind of navigate through their website and figure that out. But what happens is when you put in the information in their application, which is very quick and easy to do, you're going to get an offer in 24 hours. The benefits there are, again, no showings. You don't have to repair things, no surprises, no one letting your dogs out when they came over for the showing. Oh, that's not on the slide. But you can align your closing date and be flexible so that you can line up when you want to close and when you are going to be able to move into your Taylor Morrison home. And in fact, even beyond that, after your closing date, they have arrangements for you to stay as much as 6 months after that closing date. So you could close on your home and then take your time with getting things packed up. And then there's also kind of some local moves opportunities that are paid by Offerpad. So it's a direct offer to you. They do an inspection on it, and it's a great opportunity to partner with them and avoid some of the stress that can be affiliated with that double move. The last thing is the washer and dryer opportunity. By registering for this webinar, you've been offered the opportunity to get a washer and dryer by our primary partner, General Electric, on a new home that you purchase in the month of September. All of the fine print is here on this slide. You're going to be receiving that information later today when the seminar is completed, but wanted to make sure that you realize that that expiration date is October 31st on there, and we've got the information about which washer and dryer it is. But I also want to encourage you to make sure that you reach out to the sales agent at the individual community. They'll know more about this, and they'll know how it applies to their neighborhood and how that works. So the details are here. You're going to be receiving that, and then you'll get that at a later date. And I think that this concludes our seminar today. So thank you so much for joining. It's been really fun to talk about something that we're all very passionate about, and we can't wait to get you started. We can't wait to hand those keys off to you, because it's the greatest joy of our job is to see you achieve those dreams of home ownership. So let's get you started, and we look forward to working with all of you very soon. Thanks so much.
Thanks, Leslie.